Hello, trading has closed on the 28th of June, 2023. As always, we'll start with our disclaimer. We'll go over our calls and we'll make some predictions. It's my trading plan for Thursday, which will be June 29th, 2023. Remember, I'm not having as much time as I'd like to have to analyze things. I'm busy most of the day. My calls can be completely wrong, but tomorrow's a chance to get the wisdom of Rod David. If you're in the Eastern time zone, these are when he'll be available on YouTube. Here's the address to type in. And I don't think he's anywhere near as busy as I've been, and his strategies are pretty good. So this is a chance to learn from him. Well, yesterday we looked for the pattern with the early high, but said we could gap down. That's what this is, and tomorrow's pattern should have the early low. We outlined the ideal situation for the bears, ideal situation for the bulls, and neither one of those things happened. So we didn't get the ideal situation. In fact, we had a situation where this rally was followed by a day is essentially unchanged, and with forces pulling one way or the other, often, not always, often, you'll resolve it early in the day by gapping and properly trading outside of the day's range. It doesn't have to happen, but it happens often enough. We had this big rally to a new recovery high early in the day. MEJT cautioned that there was an optional lower target, that we were going to go under this yellow line and find support there, and that worked. Later on, MEJT said ultimately higher price would print and gave a different buy signal as well. We got the minimum from the ultimate. We almost always get more, and we did get that too. So those things have already played out. While it might look impressive that we recovered from this threat to break to new lows, but with under 5 minutes left to trade, prices were still trading under the FOMC announcement price, which often separates markets going up from markets dropping, and the fact that we had a wall into the close, which can often reverse by gapping down at tomorrow's open, that took us over this price doesn't really impress me much. So far, it's not really clear that we've done anything more than fill the gap we had last week. Certainly on the closing basis, we're not overtaking any of these highs, and it doesn't add a lot of confidence when you see we hit a new recovery high, close in the red, and couldn't manage to close under all these highs. I mean over all these highs. If we stop here, the rejection of the high, but of course nothing requires us to stop here. Time doesn't run out until early tomorrow, and if we gap and take this high out early, all that negativity goes away, and we're not going to know that until tomorrow. Right now it's a negative pattern, but that doesn't tell us how we're going to open tomorrow, and futures are already up. So it's possible that we're going to overcome this in a rally. But before getting too excited, this is the last big drop we had from the all-time high to the October low. Gann likes to divide things into thirds, and we've now recovered 2/3 right at the close of that drop. So based on his system, we're at a strong resistance level. So not only have we not overcome these highs, we've actually stopped right at resistance within a few pennies, and we have a wall into the close, which is often a false move, particularly when this FOMC announcement price held. Now, resistance doesn't have to hold. If futures are up, you can certainly break through resistance and go over this high, and that we don't know. No point in taking a guess. But if we do stop here, I could certainly explain it. And if these fall early, we still have this origin of the rally, which tends to be an unstable pattern that tends to fill. Just because it can happen doesn't mean it will happen. And that's why I think the open's going to be a very informative open. Well, tomorrow's pattern has a early low. We could still gap up. Today's pattern normally closes near the high today. If it doesn't, it means a normally bullish pattern has failed. We hit a new recovery high and close red, and if that's maintained in tomorrow's early trade, that's a sign of weakness too. Catch is futures are up as I write this, so one can't rule out gapping and promptly overtaking today's high, which would kill the negative pattern generated by today's action. It's entirely possible. I think we could be in a third wave up. It's one interpretation, but it certainly isn't a lock. Before the wall in the last 5 minutes of trading, the S&P was under the FOMC announcement price despite hitting a new recovery high, and that's bearish because the action in the last 5 minutes isn't a product of serious money. It tells you the serious money couldn't overtake an important level, but the amateurs were more than happy to take us through it. The wall into the close often leads to gapping down the next day, and if that happens, that's an if. If that happens, then follow through, assuming it occurs, could lead to a retrace of yesterday's rally. That's still what I'm hoping to see, but I can't say it's guaranteed. Bulls need opening strength, ideally with a new recovery high early, and if there's early weakness with today's low falling promptly, today's high is going to be very difficult to overtake. So when you have these wishy-washy days, close essentially unchanged, tends to get resolved early, and right now it's a weak pattern, but time's not up. We have to see how we open. We open up here, we've overcome resistance. We open down here, we've broken through support. And if neither one of those things happen, I'm just going to wait for a more clear signal than this. I still would like this to be gold B with a gold C down. That's my ideal situation. But just because I like it, that doesn't mean it's going to happen. It's a pattern with the early low tomorrow. Doesn't mean you won't gap up, but if there's early weakness and this falls, it could have legs. And that's today's call.